Hello everyone and welcome back. We are only a few weeks into 2026 and the Toronto Stock Exchange is already heating up. But if you're looking for tech stocks, you're in the wrong place. January has been all about commodities. The resource supercycle is back. Gold miners are hitting all-time highs, uranium is squeezing, and we even saw a massive diplomatic breakthrough for one embattled copper miner. In this video, we are counting down the top 10 best-performing stocks on the TSX so far in January 2026. These are the companies leading the Canadian market. Let's see who made the list. Kicking off our list at number 10 is First Quantum Minerals, up 11%. This is the comeback story of the month. On January 15th, the company confirmed a huge breakthrough in Panama. President José Raúl Mulino announced that the government will authorize the processing of stockpiled ore at the shuttered Cobre Panama mine. While this isn't a full reopening yet, it's a massive step forward that will generate cash and jobs. Investors saw this thaw in relations as a clear buy signal, pushing the stock higher on hopes that the worst is finally over. At number 9 is the simulation and training giant, CAE, up 13%. After a tough 2025, CAE is starting the new year with a win. On January 11th, the company announced a massive $270 million contract to provide the Future Air Mission Training System for the Royal Australian Air Force. Investors have been waiting for the defence side of the business to pick up, and this 10-year deal was exactly the proof they needed. The stock rallied as the market realised CAE is back in growth mode. At number 8 is the oil sands titan Suncor Energy, up 14%. Suncor gave investors a New Year's gift by releasing its 2026 corporate guidance in mid-January. The headline? More cash for you. Management announced they are increasing their share buybacks by 10% to $275 million per month. They also projected higher production for the year. When a company promises to buy back billions of dollars of its own stock, the price usually goes up, and that's exactly what happened. Number 7 is Imperial Oil, climbing 15%. Just like Suncor, Imperial Oil is riding the energy wave. In their 2026 corporate roadmap unveiled this month, they outlined a plan to spend over $2 billion on high-return projects at their Keel and Cold Lake sites. But the real driver here is efficiency. They are squeezing more oil out of the ground for less money, and with oil prices holding firm in January, investors flocked to this cash flow machine. At number 6, we have the gold giant Barrick, up 15%. Gold prices started 2026 on a tear, and Barrick is coming along for the ride. But there was also big news in the boardroom. On January the 19th, Barrick appointed Helen Cai as their new CFO. The market often cheers fresh leadership, especially when it comes with a resume of financial discipline. Combined with surging gold prices, Barrick looked like a bargain to investors this month. Breaking into the top 5 is the streaming company Wheaton Precious Metals, up 19%. Wheaton hit a new all-time high on January 13th. Why? Because Wall Street loves their business model. On that same day, analysts at RBC Capital Markets upgraded the stock to Outperform and raised their price target to $130. They cited Wheaton's high margins and low risk compared to traditional miners. When the big banks tell you to buy, the stock moves. At number 4 is Agnico Eagle, surging 21%. Agnico has been the best-in-class gold miner for a while, and in January the big money noticed. Filings released on January 18th revealed that a major institutional investor, Sumitomo Mitsui Trust, had increased its stake in the company by over 75%. When a massive fund loads up on shares, it creates huge buying pressure. The stock smashed through its previous records to hit a new all-time high. Taking the bronze medal at number 3 is Franco-Nevada, up 22%. Another royalty company, another record. Franco-Nevada hit its own all-time high on January 16th. Investors are treating this stock like a safe haven 2.0. With global tensions rising in 2026, money is fleeing risky assets and parking itself in Franco-Nevada, which offers the safety of gold without the operational headaches of running a mine. It's the ultimate defensive play. Our runner-up at number 2 is Kinross Gold, rocketing up 25%. Kinross is playing catch-up and playing it fast. On January 16th, UBS raised their price target on the stock to $37.50, predicting major upside. Kinross has been trading at a discount compared to its peers, and in January, value investors finally stepped in. The stock hit a new 12-month high as traders bet that this undervalued miner is ready to shine. And finally, the number 1 stock on the TSX for January 2026 is Cameco, exploding up 30%. The uranium bull market is back on. On January 15th, reports circulated about a deepening supply squeeze in the uranium market. With nuclear power gaining support globally as a clean energy source, utilities are scrambling to secure fuel. Cameco is the best way to play this trend. The stock hit a new 52-week high as investors bet that the uranium shortage is only going to get worse in 2026. So there you have it: gold, uranium, oil, and a copper comeback. The TSX is proving that in 2026, tangible assets are the place to be. Did you buy the dip on First Quantum? Or are you banking on the uranium squeeze? Let us know in the comments below. And don't forget to like and subscribe for your monthly market updates. Thanks for watching and see you in the next one.